One of the most confusing perils to cover is flood, especially for condos in 718, because the National Flood Insurance Program, the NFIP, as built and described by FEMA, is not like your hazard policy, is not like your general liability or other policies you might put together. It's described very specifically and doesn't follow statute as far as coverages go. It doesn't follow 718. So we have to understand the policy and then build our program around it, as opposed to understanding our risks and then building our policies and programs around our risks. So the biggest issue is, yes, you should understand your zoning so that the NFIP, who's actually going to be setting the premiums and the rates, they're going to use their zone maps. You may have to get an elevation certificate depending on what zone you're in, which could actually end up being more favorable to you, which is just the first area where things get counterintuitive with flood. For example, if you are in a high hazard area known as a special flood hazard area, SFHA, these are shaded areas on flood maps, and that could be a VE, an AE, anything other than an X. Those are known as special flood hazard areas. You'll get an elevation certificate. You may find out that your building is built higher than the floodplain, which means you'll actually receive credit and could pay less on rate than an X zone. The other important factor is your lender going to be requiring it because you're in a high hazard area? But once you sort out the zone itself, you've had possibly an elevation certificate. The next comes with what are appropriate limits and what's covered and what's not covered. And those are really combined, because a hazard policy for a building, let's say, might be $10 million, for example. Well, the average flood policy for a $10 million building, a high-rise condo or anything that's over 4 or 5 stories, could be anywhere from 20 to 35% more for flood, because a hazard policy, one that only covers wind or fire, is only going to cover per 718, which means drywall out is going to go on the master policy. It's also going to exclude foundations of a building. Flood policy is going to include the foundation. It's also going to include drywall covering, paint, floor covering, carpet, tile, ceiling coverings. It will even cover cabinets, fixtures, appliances, and all of these things are going to be excluded under a hazard policy under 718. But because this is how the NFIP has written the Residential Condo Building Association Policy, RCBAP, they're included, which means the appraisal needs to reflect that and have those higher, like I mentioned, 20 to 35% higher values. This is a good table showing those differences. So on this side, you'll see a list of items that could be in an association, and this will be the hazard policy. This red side is the unit owner responsibility, which is going to include the interior wall, area of exterior wall, including paint, tile, and wallpaper. It's also going to include interior wall area, floor coverings, paint and texture finishes. Those are all going to fall on the unit owner under a hazard policy, which means it's going to go in the HO6 policy that individual unit owners have. When it comes to flood, everything is marked under the master condo policy. Now, that doesn't mean you don't need flood coverage if you're in a condo and you have a master policy. It means that you could need contents coverage. So that's going to be your clothes, your TV, your furniture, anything that you can take out of there that isn't really screwed down or nailed down. You could still need or want to buy flood coverage for. But obviously the most important is that building coverage, which all falls on the master policy. And the NFIP maxes at $250,000 per unit. So if your hazard value is around $250,000 in replacement cost per unit for, as I mentioned, hazard, for flood, it could easily be 300 or more, which means you have a deficiency or a gap in coverage unless you have an excess policy. So a lot of associations choose to buy excess coverage, which could be $1 million to double the value of their current coverages through this separate policy, this secondary layer. And that'll supplement that gap of all the additional coverages and the fact that the NFIP can only offer $250,000 per unit. And the biggest thing also with flood that a lot of people don't realize is the definition of flood is rising waters, and that includes storm surge. So if we have storm surge that picks up water from a hurricane 20, 30, 40 feet, brings it inland and causes damage, which could include the foundations, doesn't necessarily need to flood the building and it get pulled away. It could damage the foundations in a way that the building would have to be torn down and rebuilt. And that's really the biggest risk from a catastrophic standpoint that flood presents compared to the possibility of just a little bit of water getting in the building.